welcome to this very special episode of the Startup Central. This is the Diwali special for you, and we're going to be talking about the ultimate Diwali party that we have seen this year. It is the IPO party on the Lal Street by the new age companies, by the new unicorn startups. And to discuss that and more, I'm being joined by Nikhil Kamath of Zerodha as well as Nivesh Kampani of Trika. Thank you, gentlemen, for being a part of our Diwali special episode. There's a lot to talk about. Nikhil, I'll come to you first. I know you have very strong opinions when it comes to unicorns and startups and their valuations and funding, and you yourselves are bootstrapped. I'll get to that in a bit, but first up, tell us what a week it's turned out to be, right? Nykaa, Policy Bazaar. You're going to have the mother of all IPOs, Paytm, soon after Diwali on the anniversary of demonetisation. What did you notice this time with Nykaa and Policy Bazaar? Again, record opening accounts, millennials flocking to the Lal Street, wanting to get some allocation if they were lucky?
Yeah, so happy Diwali, Nayantara. I think with Nykaa and Policy Bazaar and Paytm, and even Zomato and Cartrade and the other IPOs we have seen of late, I think it's nice to watch new age businesses come and participate in the stock markets. It allows a larger proportion of our population to participate in the India growth story in a way and in the technology growth story of India. So it's good. I like the timing of it. It's coinciding with Diwali. When you come to valuations and whether one should invest or not is another story altogether. I'm a fairly pessimistic person today, where I believe valuations of a lot of these companies are higher than they should be. I don't like the concept of smart money in a certain way offloading off to retail money when IPOs happen. But notwithstanding all that, I am happy to look at all these new IPOs and all these tech companies coming to the stock markets to raise capital.
Okay, we'll get to that in just a bit. But Nivesh Kampani, opening comments from you, please. And just seeing the success of Zomato, Nykaa, Policy Bazaar, one can't help but wonder that does the market regulator now need to reconsider the retail quota? If you're not profitable for 3 years, the portion has to be much smaller, right? 10%. But just seeing the kind of demand and response, do you think it merits a case for a reconsideration?
To start off, happy Diwali to you, Nayantara Rai. Yes, also in a way, I think, of course, as I mentioned, it's the bull market is always a time when you have a series of IPOs coming in. You will have one of the good IPOs which come in first. Of course, then the valuation starts picking up because, of course, people want to take money off the table. And then ultimately, you will see some accident which will come in time. And this is what we have seen time and again in the past as well. So I think it's a time when the party lasts. I think we will see all this euphoria coming in. People want to participate. SEBI is doing the right things. They made some changes which are effective from April 1 in the HNI category for sure. I think that is a very welcome move for a lot of HNIs who are subscribing with their own money. But as I said, I think retail investors have to remain cautious because the institutional investors come with a very different mindset, a very different horizon, as Nikhil rightly pointed out, right? You don't want smart money to pull out and retail then holding the ball at the end of it. So I think people who have long-term horizon look at the path to profitability or exponential growth, which is what we discussed in the past. And if we understand the business, I think people should subscribe to IPOs, right? Otherwise, IPOs is not the game for retail investors.
Nikhil, you said you're a pretty pessimistic guy when it comes to these IPOs. So I take it you didn't apply for Zomato, for Policy Bazaar, for Nykaa, any of them?
None whatsoever. Not that I'm happy about it, considering how some of the IPOs have done from a price point of view. But I'm fairly traditional in the way that, I like to look at companies with cash flows and profitability and buyings of value when the time is right. I personally like to avoid the flavor of the season. And I think even though you have like tremendous FOMO and you feel like you're missing out all the time, hopefully in the long run, it kind of pays off to be erring on the side of caution in a way.
So no regrets.
Well, regrets about not having made money, yeah, totally. How can I not, right? But in the long term, hopefully it gets converted into no regrets.
Nimesh, you want to take on Nikhil on this point of view? He's calling these IPOs the flavor of the season. I know we've all been talking about how the characteristic of the Nifty, the Sensex could change in about 10 years time from now.
Exactly. So I think what will happen with what is happening is, of course, you're seeing a little bit of euphoria right now. And I agree with Nikhil to the point that there is a lot of FOMO in the market. But you are seeing a lot of reallocation of assets, right? So a lot of the funds, global funds, which are including pension funds, which have been large investors in traditional companies in India and outside India, have now reallocating funds to tech companies. Right? I think that is something which is again smart money coming in, replacing the earlier smart money, which was in the form of PEs and VCs. So I think that is something here to stay. And as long as the quality of the company is good, the quality of founders is good, of course, your corporate governance and everything else has to be in place. This is an opportunity to participate in the high growth segment of the country business, right? Because most of these startups, even though they are just maybe up to $10 billion valuation, it's still just the tip of the iceberg, right? Because there is huge opportunity, as I said earlier, in Bharat, right? I think the entire India remains untouched for most of the unicorns and most of the companies which are coming up with IPOs. So with reallocation of assets on one side, with the huge business opportunity for growth on the other side, with excellent execution management team sitting at the helm of one of these companies, I think it's a very good bet for longer term horizon from 5 years if you're looking at. Right? I think that's what I said. It's not 1 year long term; it's 5 year long term. It would make sense to be an investor in these companies if you have a long term for sure. A lot of patience is required.
Okay, so a lot of patience is required, is the consensus that seems to be here. But Nikhil, I want to ask you one thing. You said that you're traditional. But if I were to look at Nykaa, it did declare a profit, right, last year. I understand it's only one time, but it's a relatively new company as well. Look at the solid founders that you have as well. You still didn't want to go in for it?
See, outside of declaring a profit, I think the question is how many times the forward profit are you actually buying, right? If you look at the listed space right now, there are manufacturing companies trading at 130 times. There are chemical companies trading at ridiculous valuations. What one needs to remember is when you buy a company at 130 times forward earnings, if the company makes the same amount of money, you have to wait 130 years to get back your investment in terms of profit. That doesn't sit well with me. I get rate of growth and predictability. I feel like nobody can truly foresee the future. Even if a company is growing today, does not mean it will grow for the next 50, 100 years. Companies historically have had a life cycle, right? Like if you go back in time, look at all the companies that have been around from the very beginning. A company on average survives for between 8 to 10 years, and I'm talking beyond a certain scale. So I don't buy into the story that something is growing at X today, so it will continue to grow at X for the next 20 years, and based on that, I will pay a certain multiple today. I'm not on that side of the boat, and I don't believe in valuing companies like that. I think the cyclicality of stock markets, not just in India but across the world, there will be opportunities. Maybe not today, maybe 5 years down the line, when things go back to near long-term averages and near historical valuations. And the idea is to have enough gunpowder, to fire then and invest when that opportunity arises. So at this point in time, at the current juncture, skepticism kind of is ruling my decision making a bit more than optimism.
Nimesh, I would imagine you're far more optimistic.
Yeah, definitely. So my views are slightly different from what Nikhil mentioned, and I respect the traditional view that he has. But I think the way I would look at these companies in the new age economy and what we have seen in the US, right? We maybe 2 decades behind US in terms of how our startup ecosystem is maturing. And Amazon is the poster boy. I don't think anybody has read about Amazon and how they created a loss-making business for a decade after listing into a profit-making business using the right tools on the way, right? They were continuously expanding the product profile, continuously growing their customer base. A lot of research and innovation was happening. And at the end of the day, it is about user usage and monetize. Right? And that's how this entire industry works. And that's what everybody knows out there very well, including Nikhil. So somewhere down the line, I think monetization will come. Right now, it's just basically to target the human psychology of laziness and make them use the product multiple times, and that is what you are seeing in the ecosystem today. So that's where we are a little bit early in terms of coming to the fore in terms of the companies growing and becoming larger. Monetization will follow suit, but yes, I think the other aspects of high growth, innovation all the time, right? Product innovation, research innovation. And continuously focusing on growing the product profile for the customers. Going deeper into the customer profile is what I think each of these companies will have to continuously do, because as Nikhil rightly said, the same product, and that is what we are used to in traditional companies. It's that one product which goes on for 10 years and then you hit the block. But this is where it gets interesting, is where you'll have multiple products with that same customer, going deeper and going into the entire vertical and horizontal ecosystem of that customer for that particular product suite. That is what will create value ultimately, and that is where monetization for all of these large moat companies will happen.
Okay. Final comments I'm coming to now. Nikhil, we've got your views in. I think what you're doing is indirectly, of course, benefiting from all of these IPOs with Zerodha, right? The kind of subscriptions that we've seen in. Any insights that you can give us when it comes to Nykaa and Policy Bazaar at the time of Zomato IPO, when we saw those record openings? It was also said a lot of customers were opening demat accounts because they believed in Zomato.
Yeah, so I think Nayantara, Zomato has set a precedent in a certain manner. The fact that that IPO was so large and did so well, the appetite for IPOs in a similar realm will continue to persist for a certain point of time. I think the way retail psychology works is when tomorrow one IPO does badly and it's all over the news and we're all talking about it, the following IPOs which come after that will not have much appetite. But right now, people are liquid. They have cash to allocate. There is a lot of greed, which is governing sentiment. So I think all of these IPOs, up until something goes wrong with one of them, will continue to see a lot of interest and a lot of money will come into, Nykaa and Paytm and everything else that will come in the following months.
Nimesh, coming to you now. Next week, 8th of November, the anniversary of demonetisation. We're going to see the mother of all IPOs, Paytm, trying to break the largest IPO record currently held by Coal India. What can this IPO mean for Indian tech companies?
So Nayantara, I think I would position it a little differently. In terms of, I think it's the entire India basket which is playing a role today, right? Because each of the companies are with a more leadership position in each of their segments that they are working in. Say, for example, Nykaa is a leader in the B2C segment. Zomato was a leader in what they are doing. Similarly, Paytm is a leader in the fintech space, and of course, the pioneer in what they built and a brilliant business they built out. Ultimately, it will, you have to see what the investor thinks about it in terms of how the company will perform on the bourses, right? Because it's a very different story. Like I said in the past, right? Getting to the unicorn status is the first day lunch of a test match, and doing an IPO is the second day lunch. You have a long way for the match to go, and ultimately the team has to perform. So we'll have to wait and see, because as the company gets listed, you see much more disclosures, much more transparency in things, a lot of investor feedback. So you'll see all of that coming in over the next 1 or 2 years. That will ultimately tell you the story, how it pans out. But yes, I think definitely a brilliant business, one of the biggest moat in the industry that is there, and the leaders of the industry. So I think all of the leaders are anyways doing pretty well. Paytm, I'm sure, will do.
Gentlemen, thank you so much for joining us here. Happy Diwali to you, your families, your teams. Wish you all the very best.
Happy.
Thank you. Thank you, Nayantara.